if we didn't have this kind of euphoric pop from Apple, would we be seeing declines in the market today?
I think so, and I mean, you have to couple that with Tesla too. That's doing its own share of heavy lifting. It's a risk-on trade today. You have large cap tech trading higher. You have risky assets like Tesla trading higher, shirking off a lot of the trade concerns. But definitively, if we didn't have that, we wouldn't have the run in the market today.
Does it say something that Apple reached $1 trillion today about the overall market? Do you worry that's sort of a signal of some sort?
It usually is. You know, you don't get that many times to shoot the top, but I think that there are a lot of bears shooting at that $1 trillion mark, equal amount of bulls shooting at it. But for me, you could overshoot a little bit, but I definitely think you'll see a pullback from here.
Carol, what about the trade fears? Do you think it's right that they're kind of taking a back seat today and this week?
Yeah, absolutely. I think the trade fears are going to sort of disappear the closer we get to the midterm elections. I think the strategy has been to make them look very scary and then make them disappear as deals are negotiated. So I think trade fears are short term, and I think Republicans certainly are going to want them off the table when we get to the election cycle. So in another month or two, trade will go away, and then we'll see how great the U.S. looks. Strong earnings.
It doesn't look like they're going away. It looks like they're getting worse, the trade tensions.
Nah, they'll go away by November.
The percentage tariffs on the $200 billion worth of.
Well, they're losing their effect on the marketplace. I think that's probably a fair.
I guess I'm just trying to figure out why.
Because in the end, they're not going to happen. In the end, they're not going to stick. Because once we get toward the election cycle, the Republicans are certainly not going to want to see those kind of tariffs affecting the U.S. economy and being a tool for the Democrats in the elections. So for that reason, I think they'll just sort of fade into the background, and the focus will be on the fact that the economy is doing extremely well and companies are doing well. They have a lot of cash to invest, and I'm a big growth bull, as you know, and will continue to be so.
You make it sound very simple. I'm not sure that the president's thought process is quite that simple. We shall see, of course. Rick, let's come to you.
Not to mention President Xi.
Not to mention President Xi, exactly. Rick, let's come to you. I mean, I'm interested today that we've seen this 9-0 vote by the Monetary Policy Committee of the Bank of England to hike rates, and the pound has fallen sharply off the back of that. What does that say about the likelihood that the dollar strength might abate from here? I mean, the dollar pretty strong off the back of that.
Yeah, no, I'm very impressed. Listen, part of that, of course, is the expectations of a tightening and traders getting in front of it, but it really doesn't explain. It was a bit of a rout today, especially if you look at the longer-term chart and how close the pound is to really breaking out to the downside in a more aggressive fashion. Even the euro currency. And you take the dollar index. So today it looks like it's going to close somewhere around 95.25 or thereabouts. The high intraday trade for this entire move since the lows is around 95.65. From about the third week in July, when President Trump was talking about how he wasn't fond necessarily of a strong dollar. To think that it's come back and it's going to potentially charge through or test that level again is very optimistic if you're a dollar bull. And if you're a multinational corporation, you know, I wouldn't think you need to despair, because really, if you get down to it, the thing that harms multinationals in their currency du jour is volatility. And we could say a lot of things about the dollar index in the foreign exchange market since about May, but for the most part, the word I would use is contained, somewhat like interest rates, tight ranges, maybe some intraday volatility, but not necessarily a lot of close-to-close volatility on the dollar side. That might be in the process of changing to a more aggressive trade to the upside.